Welcome to this podcast on customer analytics in banking across Asia Pacific. I'm Dr. Chris Marshall, and I lead IDC's data and analytics practice across the region. And I've spent most of the last 30 years or so working in academia, working on applications of analytics, particularly in financial services and capital markets. So today I'm really delighted. We've got a 20-minute session that is part of a two-part series sponsored by Virtusa. And in today's session, we're hoping to review some of the top trends and opportunities that are making customer analytics such a hot topic in the marketplace today. In our follow-up session, we will discuss some of the best practices that financial institutions especially, and retail especially, are looking to employ to jumpstart their customer analytics. Now, as my guest today, I'm delighted to welcome Javeed Wahab. Welcome, Javeed.
Thank you, Chris. I'm delighted to join you in this podcast. I'm VP of Technology and Chief Architect for Asia Pacific. I'm based in Sydney. I have 2 decades of experience working on digital transformation initiatives for many clients, primarily in banking and financial services. In my current role, I'm responsible for defining our technology and solution strategy for Asia Pacific. I work with all of our clients in the region as a trusted advisor, helping them build business case, drive their technology strategy, and bring in right level of governance from Virtusa. Virtusa is a global systems integrator known for our deep engineering heritage and domain-led solutions. We are in operation in 15 plus countries and have made significant investments in solutions and assets in our chosen industry. Banking and financial services is our largest industry vertical, where we have delivered various digital transformation initiatives for some of our marquee clients. This has helped us as a company to deliver $1.6 billion in revenue this past financial year. And this growth has been enabled by our workforce of 33,000 employees globally. We have been in operation in APAC for 15 plus years. We are among the fastest growing businesses in the region. The significant focus on banking customers, and the other sectors that we operate in are healthcare, life sciences, insurance, and telecom in this region.
Thank you, Javeed. Now at IDC, we continuously monitor and survey IT decision makers' priorities. Now, the overriding trend that we are seeing in the banking space right now is really digital transformation. And this has been accelerated by COVID, obviously, but has been part of a bigger trend and a theme over the last decade or so. Now, this move to digital transformation really does have a host of implications. For one thing, DX successes really at the front end show up and highlight the limitations of existing legacy systems on the back end. And as a consequence, we think it's really made banks start to reinvest in modernizing their core banking platforms. But of course, core banking really does mean many different things to different people. For some, it's all about containerization and microservices. For others, it's about sort of big bang, rip and replace kind of activities to modernize their entire existing legacy systems. For others, it really means about looking to move to the cloud, hybrid cloud platforms. So if that weren't enough with digital transformation, it also means, I think, gathering more data about customers across the various channels. And of course, this data needs to be brought together into one place. So we're seeing very increased demand for integrated customer data platforms on the back of digital transformation. Now, again, building on top of the data platforms, banks are aggressively adopting analytics and AI to use that data for cross-selling, for managing customer journeys, et cetera. So, a host of different challenges and opportunities for banks. Now, this is a huge set, Javeed, and I don't know, does this align with what you're seeing in the marketplace?
Yeah, that largely aligns to our experience in the region as well, Chris. When banks start to look to expand their market share in their product segment, the initial investments traditionally have been in uplifting the customer experience in primarily the front end and digital experience or distribution channels. With such investments for chief digital officers, head of digital, they've done a great job in uplifting that customer experience for the digital channels. However, for a customer, the eventual experience is not total unless there is end-to-end transformation for underlying systems and processes. If you take, for example, a customer's home loan journey, transforming the application forms does not ensure customer delight, does not ensure meeting of business objectives. Unless there needs to be an end-to-end transformation. Market demands are such that there is much more need for personalized offers, personalized customer communication, faster decisioning. There's nobody going to be waiting for days and days for approval for a home loan. So there are banks that are looking to move towards an hour approval. So that's where the market is moving. That again leads to the point that you indicated, needs to have a better single view of the customer, powerful customer data platforms. And that's largely aligns to what we are seeing in the market. We at Virtusa are at least working with 3 different banks at this point in the region in transforming their customers' lending journey. And that's a significant piece of work that we are engaged in. There's also an opportunity for customers to revisit their approach towards digitization initiatives. They have been traditionally looking at front to back kind of an approach. Is there a more back to front approach? Is there more a center out approach in doing digital transformation? So these are some of the conversations that we are engaged with our customers. Banks are looking to redefine their strategy of core banking, in particular data platforms. Even the culture of how they have traditionally delivered has started to change so as to enable banks to deliver better personalized services to their end customers.
So based on what you say, I mean, it does seem that the time is really ripe for sort of modernizing core banking from a sort of middle outwards kind of approach instead of from the front, if you like. It's interesting. One of our predictions actually is that something like 40% of banks in the region are looking to develop a common platform in the next 2 years or so to deal with, the problems of channel fragmentation, frankly. And of course, the hope is that this will lead to more actionable, sort of proactive alerts and data services on the back of those platforms. And one thing we're definitely seeing is, you need to have this modern core, central core, if you like, to drive sort of personalized engagement and better response to market changes, new products, etc. But the fact still remains that most banks are still relying on existing legacy systems that have often been in place for sometimes even 30 years. And, the danger is that, they're not able to adapt, as you say, to competition from other banks or even from non-banks. And a lot of institutions are struggling. They almost don't want to touch. They take the attitude that if it isn't broke, we don't want to fix it kind of thing. And they're almost scared of messing about with core banking systems. Even though they happily do sort of experiments on things like microservices and APIs, but they don't want to touch the center because it's viewed as too risky, too expensive, too complicated. So I ask you, is this a sort of a question of leadership? Is it that the senior executives say, core banking, big, complicated, scary, you don't want to do that? Or is it because of the sort of complexity of a lot of these core banking projects? They tend to be big, complicated, and they require a lot of cultural change and all the rest of it. So going back to you, Javid, what do you see as the disincentives for platform change and redesign? I mean, what are the pitfalls that stop core banking ever getting off the ground, if you like?
In terms of pitfalls, there are 3 things that I would call out. Firstly, when banks start to approach these, there is a greater sense of approaching these as technology, just a technology transformation. We would recommend starting to look at it as more a business-led transformation. There is obviously business and IT joint transformation around this, but focusing on business value is critical. It's very easy to bucket this as a transformation of technology. Looking for opportunity to modernize business processes and maximize the business value is a key aspect of that. That would be number 1. The second pitfall is not choosing the right transformation approach. What works for someone else may not work for the bank. So looking at the different options available in terms of core banking modernization. There is a big bang approach. There is a progressive modernization approach. There are also greenfield tech stack implementations that banks could adopt. There is wider adoption now for cloud native core banking platforms. So it's at the end of the day, horses for courses, and banks need to figure out which approach would be right for them. And we are working with various such banks in helping them make the decision. The other aspect to look into is establishing holistic governance. And you mentioned about leadership and culture. I think that's a key aspect to ensure that there is a holistic governance established to ensure success of these programs. Adding back to what I said earlier about focus on business value, getting in the business stakeholders, getting in the IT stakeholders, getting the leadership, getting third parties involved, so that there is a holistic governance, consistent communication throughout the transformation. Those were the three things that I'd call out, Chris.
That's interesting. I mean, one thing that I certainly take away from your comments is the sort of the new business emphasis on technology change. You know, it's got to be led by the businesses. It can't just be a technology initiative. And part of that story, I think, is to do with analytics as well, right? An awful lot of the business value that's created by the improvements in the core systems is really about the analytics that it enables, and therefore the ability of that analytics to support customer journeys, cross-selling, whatever it happens to be. We do see, in fact, at IDC, we've just done a number of surveys. We're looking at, you know, relative analytic maturity across banks and across other companies in the region. And we do see quite a wide range in terms of analytics sort of capabilities, if you like. So you see at the top end companies in Singapore or Hong Kong, and maybe Japan to some extent. And then at the other end, you know, you start to see other countries that are struggling to catch up. And I don't know, in some ways, I actually wonder if that sort of previous investment in analytics and technology can actually be a bit of a, can actually hamstring them, because, you know, you're so committed to your existing infrastructure. It may be that if you haven't got that infrastructure, you've got the opportunity to jumpstart and be a bit more creative. I mean, I've said in a number of banks in Vietnam that don't have that history, that analytical capability, but have been able to sort of jumpstart their initiatives and aggressively transform in ways that, you know, existing standard competitors like, you know, people like Stanchart or DBS aren't able to do because they've got so much legacy. So tell me, Chevy, are you seeing sort of regional differences playing out in the core banking space and the analytics space that supports particularly retail banking? And what sort of advice would you give anyway for a smaller bank, you know, I don't know, Malaysia or Indonesia or the Philippines, that's looking to sort of jumpstart their customer analytics journey, maybe with banking, maybe with customer data management? What would you say to them?
Yeah, you made an interesting point about banks and regions able to jumpstart if they're not mature enough in their life cycle. Interestingly, earlier this week I was in conversation with a CTO of a bank who was looking to go to a more digital only stack. However, they just invested 3 years ago on their cloud journey, doing more of a lift and shift. And I was giving another example of a bank who are going towards a completely digital only stack, cloud native kind of capabilities. And he said, sometimes that's easier. And we had to have this hop, and then we have to have another hop. So yeah, we see that in the marketplace a lot. However, there is opportunity for our banks to kind of catch up and adopt these cloud native technologies. We see there are at least three trends or aspects that we notice. There is greater adoption of fintech partnerships by banks in the region. That the focus of fintech to enable better banking services. There is a significant adoption of embedded finance in the region compared to across the globe. There are technologies, fintech capabilities that are adopted to deliver pointed solutions for customers. And we recently implemented a marketplace that enables such fintech partnerships. And we've done that for some of the largest banks and some of the largest bank and financial institutions in the region. So that kind of enables that market. That's one key aspect of it. There are also transformation initiatives that are triggered by regulatory mandates. For example, open banking, new payment initiatives in Australia have definitely brought about a change in how banks look at modernization and opportunities that are available to provide better services for the customer. We do see that now catching on in New Zealand, Hong Kong, and some of these regions. So these open banking and new payment platforms and regulatory mandates have provided opportunities for banks to leverage the data that is available to provide more personalized services for customers. And we also see a trend emerging in banks looking at ways to leverage their branch better. Adoption of technology is significantly improving in branches. And some of the countries where the digital adoption may not be there, but there is a bit more culture of visiting branch. We see banks investing in the branch level capabilities and adoption of technology. We recently developed an application for relationship managers to deliver better personalized services for customers who are practically sitting in front of them in the branch. So there are such adoption. There is better ways of working and in the branch itself. So that's another trend that we are seeing.
It's interesting. You point out a number of opportunities really and real life practices that banks are actually adopting to improve their retail customer service. And ultimately, I don't think we should lose sight of the fact that better banks mean better economies, and better economies mean, everybody has a better life. So I think that social value that's supported by technology, particularly in branches in places like Indonesia or the Philippines. With that, I think we've come to the end of our session today. Thank you so much, Javid.
Thank you, Chris. It was a pleasure talking to you.